How's it going, everyone? This is Socrates on the Hyperwave channel. I am coming at you today with a quick update on Bitcoin, Litecoin, and Ethereum. Unfortunately, Tyler will not be joining us today. He is traveling overseas, had a long flight. Sounds like he's just getting settled in and is pooped out for the day. So asked if I could come on by myself to tell you guys what I've been looking at, and I was more than happy to do so. So with that being said, this is my first time doing a show individually, so I am feeling a little bit nervous, but think that I can handle this without too much trouble. So let's go ahead and jump right into some charts. The markets have been moving, and I have been making some moves myself. So let's go ahead and pull up the Bitcoin chart and take a look at what I have been doing with my position. I have been long Bitcoin from down in this area. People that have been following along for the last couple of weeks are aware of the entry signals that we had based on Consensio as well as the Wyckoff accumulation. First target was 9,600, and I decided not to take any profit when we got up to there. That was for a number of reasons. First of all, consolidating into a bullish ascending triangle below multiple areas of resistance told me to hold on to my full position and wait for further development. The next thing I was keeping my eye on was the top of this channel. And looking at it as a bit of a fractal from back here, we had a bull channel breakthrough with a bit of a flag that occurred at the trend resistance before taking off into a parabolic move. Got a similar situation here. So when I was seeing this flagging sort of ascending triangle formation occur at the top of this bull channel, I was looking to move stop losses up. I moved them up at that time to slightly under 8,800. That was the area of horizontal resistance support that I had outlined, and if that broke down, then I did want to go ahead and get out of my position. That didn't happen. And excuse me, I did misspeak there a little bit. I did move half of the stop loss to right here, the other half to break even, thus ensuring a profitable position and also helping to avoid if there was maybe a bit of a trap, a big breakdown before it shot up, then I would have been able to hold on to a little bit of my exposure. So that's what I was thinking there. Didn't take any profit at 96, but did move stop loss up to slightly under 88, which ensured a profitable position. After we broke through the top of this channel, I did not think that 10,000 was going to hold as resistance. I mentioned that on a prior show and outlined the next major areas of horizontal resistance up at 11,390 up to 11,718. And that was done using the Fibonacci retracement. Starting at the top and connecting to the bottom, we get the 50% point at 11,402. So that is the first area of horizontal resistance that I have been very interested in after breaking through this channel and breaking through 10K. Next is going to be at about 11,500, and that is based on prior horizontals on the weekly chart. We see that's where this close and this open occurred. Also had a close and an open a little bit further back. So that's at 11,500, and then the next one up is 11,700. So we are at significant levels of resistance right now, and because of that, I want to be managing my position accordingly and making sure to not miss out on this unrealized profit that is sitting there waiting for me. The name of the game is letting your winners move in your favor and letting trends continue in your favor, but not letting them fully reverse before you get out. So that's a very fragile relationship where you don't want to be getting out back in here right before another big move up, but you also don't want to be holding all the way back until your entry, such that you had significant profit that just slipped right through your fingers. So that's the balance that we want to try to find here. And the best way that I have found to do that is through trailing stop losses and staggering them. So let's take a look at this 9 EMA on the 4-hour chart. Notice how well it has been acting as support on each one of these pullbacks. These brief sell-offs, we have been finding significant support at this 9 EMA. We've only had one close below it in recent history. I'm just talking like last week or so. One close below it and quickly rebounded right back above. Outside of this candle right here, we have not had a close below this 9 EMA since back on June 19th. And again, that only happened once, and we quickly came back above. So that is what we're seeing here. And this is something that I really like to use long-legged dojis or long wicks as areas to trail my stop losses to. So after getting this sell-off and a wick back off of this 9 EMA on the 4-hour chart, I have adjusted my stop loss for about 75% of the position up to right under this wick, right about 11,049. So that is where I would be exiting a significant percentage of my leverage long on Bitcoin, is if at any time we fall back below 11,050. It wouldn't need a close. This is a hard stop loss that I have set as a market order. If the price falls below 11,050, then that will be triggered. And that will lock in a very good amount of profit. And another reason, so there's a few reasons why I'm wanting to make sure that I've got a tight stop loss right now. First of all, is the significant areas of horizontal resistance that we've got stacked up one after another. When I see a confluence of resistance, that's generally an area that I like to sell or use a very tight stop loss. So that is reason number one. Reason number two is kind of this fractal that we've been seeing. Notice that when we broke through this channel back in May, had a big parabolic move up, sharp correction, and then an exhausted kind of fifth wave that looks very much like a bear divergence on the RSI. So let's pull that up and see if that's what happened. So we're looking at right here to right here. Notice, sure enough, bear divergence with the RSI. So that's kind of what I've been watching for here is parabolic move after breaking through the top of this parallel channel, and then one last little exhausted move upwards, which gets people to kind of FOMO enter right in here, and then also gets to wipe out the stop losses on shorts that entered back in here. This is just a very common pattern. You get a big move, consolidation, and then just a last little small exhausted move, and that exhausted move is very often can be identified with a bear divergence on the RSI. And sure enough, that looks like what's happening right now with this lower high right here and higher high right here. Yep. Okay, so we see that. is showing a lot of similarities to this action back in here, which doesn't necessarily suggest that there isn't a lot more upside, but does suggest that there could be a significant correction coming, and that if there is more upside, it will follow about a month's worth of consolidation. So that's pretty much what I'm thinking is most likely from here is either a full-on correction back down below 10K to maybe 75.8 area, or about a month-long consolidation that looks something like this, where we just kind of go sideways below 11,500, but above, say, like, above 10,000, probably significant, probably more above 10,400. So that's the two most likely scenarios that I'm seeing here. The third option would be to continue rallying through these areas of resistance. That certainly could happen. Reason why I'm not thinking that it will is because that's major resistance and we are exhausted based on the RSI showing a divergence after a big move in a short period of time. So if we do break through these areas of resistance, I think it'll just be a trap, that there might be a wick above that kind of wipes out some shorts, and then also further traps in some late buyers. So if we do get above this area, I don't think it'll last for long, but that being said, if we do that, hopefully I'm still in my position, because I oppose to just taking profit when it looks like I should be. Like right now, we're at resistance and we're overbought and I'm deep into the money. So therefore, I should be taking profit right now, would be logical in a lot of people's minds. And that is absolutely right. But instead of just taking profit going in and doing it right away, I strongly prefer to do tight trailing stop losses. So if instead I get out at $11,049 instead of $11,349, then that's a pretty small difference. That's really not that much. That's like 2.5% difference. So I would be basically risking 2.5% unrealized profit by using a trailing stop loss right now instead of taking profit right now. And I think that that's totally worth it, because if I'm wrong and we do break through resistance and continue to move up, then we should move up much more than 2.5%. So the risk that I'm taking, I'm only risking unrealized profit, and it's a very small amount in relation to how far I think we would go if we did actually break through 11,700. So this is basically the same philosophy that I used back in here. Right back in here, I was thinking that we were going to continue higher, but I was feeling very uncomfortable about being overbought at resistance. You see that we had the RSI was way up here, overbought. We're at horizontal resistance. We're at trend resistance. We almost got to my target of 96, but not quite. So I'm sitting in all this unrealized profit, and I'm very uncomfortable because I'm basically having to hold through significant resistance while being overbought. That's something I just do not like doing at all, like ever. And the only time that I can do that is if I have a tight stop loss, which I did here at 88, slightly under 8,800. So when price was pulling back and closing below this 9 EMA and looks like it's really rolling over, coming back to test these lows, I'm feeling fine. I'm not worried because I've got this stop loss set right here, which is guaranteed a profitable position. Same sort of situation here where I really don't want to be holding through major resistance while deep into the profit, but I can do that because of this trailing stop loss. And again, that's only for 75% of the position. So even if this does get triggered, I've still got 25% of the position that's essentially going to be at a negative cost basis. Again, I did use leverage here, so I am up over 100% on my margin, and I will be if this stop loss is triggered on 75% of my position. So if that happens, now I've gotten my full initial investment back plus a little bit, and I've still got 25% of the exposure, and that exposure is at a negative cost basis. So I can essentially just hold on to that indefinitely as long as I think the trend is bullish. And that's really how I like to build, use position trading to build long-term exposure. And I guess I should say swing trading. Everybody has a different definition. So here, I really like swing trading, position trading, trying to capitalize on these short and intermediate term moves. And then when I am successful in that, I like to take profit into Bitcoin. So instead of fully capitalizing on all my profit and withdrawing the USD in my bank account and buying myself a new driver, I am going to hold on to that, the remainder of that position, which is at a negative cost basis. So that is how I like to swing trade in order to add to my long-term exposure. Hopefully we do continue going up here through here. Hopefully I'm wrong, and we do continue mashing through resistance and neglecting any overbought conditions. Hopefully that's what happens, and hopefully I have the whole position. If not, maybe I'll still have at least 25% of the position because I've always set to take out 75% here. So that's a long-winded way of saying what I'm going to be doing here. Other thing I'll be keeping an eye on is another sort of channel developing. Notice how after we've had these big parabolic moves, then a bull channel has developed. Potentially we're seeing something like that happen in here. Got to get myself a drink of water after all this talking. Okay, so let's take a look at some higher time frames, because on the last episode I did say that this looked like it was a strong move opposed to an exhausted move, and there are still a number of indicators suggesting that. So first of all, let's take a look at the TD, and it is on a green 3, and I am inclined to think that it's going to get to a third green 9 after mashing through that second green 9 and this TDSD level and this fib 0.382 fib level. I really felt like we should get to a third green 9 and not any further before a major correction. So what would that look like? I mean, that would look like another massive move, probably up to I mean, I hate to say it, but if we do get a 9, it probably wouldn't come below 13,350. It would probably come more in the 15 to 16,000 area, which based on the TD sequential, it seems like we can get there. And that is confirmed by this average directional index, still trending up, still in strong trend territory, and still not having even started to roll over yet. And the RSI is not showing the same divergence on the weekly, on the higher time frame. It looks ready to create a higher high along with the price. So that being said, I mean, it really looks to me like we should continue through this area of resistance, and we could do so in a significant way. However, that's not what I want to be expecting. When I'm deep into the profit and we're at resistance, I don't want to just be thinking, man, we've got so much more room to go based on the TD and the ADX. That's not what I want to be thinking. Instead, I want to be looking at how to protect myself from the downside. And that's where I really like the trailing stop loss. Potentially could bring it back here below 10 to around like the 10,240 area. Potentially this is a little too tight up in here. But I just, I am very inclined to be taking significant profit if we break this down. And that's because of this wick off of the 9 EMA for for a large part. Notice when that happens, we really don't come back to break down those lows. We may come back to kind of retest that area, but that low continues to hold. Getting a wick off of that EMA is something that I really like to see and think it's a really good spot for a stop. So I'm in a position right now where I think that, you know, there's a very decent chance we can continue higher, but I still want to be very diligent about protecting myself in case that doesn't happen. And seeing that the 4-hour is now on a green 9 and we're getting some dojis at resistance, that is confirmation to me that if price does break down 11,050, that I do really want to be taking significant profit, even though the higher time frames are giving me very strong indicators that there's significant room to go. Just to do one more thing, the Ichimoku cloud, as people may remember, just closed above the cloud last week. That is a buy signal based on the Ichimoku cloud. That tells me that the long-term trend is now bullish, and tells me that this is the beginning of a trend opposed to the end of a trend. So a number of higher time frame indicators that are suggesting that there is plenty of room to go. However, that doesn't mean that we should not be looking to protect our unrealized profits. And the reason why I am profit taking a little more aggressively than I would like to in such a strong bull market, I really want to give that thing room to go. So in this situation, I am a little bit handcuffed because I did have to take a big loss on my LTC BTC position. I entered a large position long LTC BTC in this area here, and it was the trade I was most confident about of the whole year. I mean, this trade I was feeling very, very good about. So I bet big. And when you bet big and get stopped out, that means you lose big. And that's what happened to me. So because of that, I want to try to recoup those losses ASAP and potentially be a little bit more risk adverse than I would really want to be. And I'll walk through that here real quickly. So I was looking at buying right in here on this trend line retest, and I added when the position moved against me, and I added when we tested this 200 EMA right in here. And I should have probably trimmed on this retest here, and that probably would have allowed me to get a stop loss in here that would have been roughly break even. I didn't do that, probably because how confident I was. I really wanted to make a lot of money on this trade. I thought that leading up to the halving, we were due for an enormous rally. I still am inclined to think that. And seeing Bitcoin was rallying hard and Litecoin USD was lagging behind. So everything was basically lining up for me as a very high probability, low risk situation that I wanted to really try to capitalize on, because these sort of situations really don't come along very often, where the fundamentals and the technicals really line up and scream to be in a large position. So that is what I was thinking back in here and in here. So I was using 3x leverage on this position because I wanted my stop loss below this area here, which was very conservative. I really did not think at all that we would, I just thought that was a very conservative stop. So that makes me feel good. When I get stopped out and I look back at my stop and I think that it was too aggressive, that makes me feel really bad. It makes me feel like I was kind of gambling and probably using a little too much leverage and using too tight of a stop loss to justify that higher level of leverage. So I'm really glad when I look back at this trade in hindsight, I feel good about it. I recognized an opportunity and I pulled the trigger and I executed well based on my system. So entering in at moving average and trend support, and then using the prior low, the prior swing low to set my stop is exactly how I like to trade. And the prior swing low can almost always be identified with a Bill Williams fractal. And that's what we see here. So if we have this, we got a higher low, higher high. If we don't create a higher low above this on this pullback, then see you later, for the trade. This is very conservative, but it's also justified and warranted. It protects me from the big traps that we see that will often happen before the huge breakouts, like we see right here. You'll just get these enormous shakeouts that happen before huge moves. So I love my stop loss being tight. And then notice how on the enormous shakeout, we didn't get back down below the prior swing low. We've got a higher high, and then we come down higher low. So that's what I wanted to see here at all costs, is a higher low above here. And if that didn't happen, then I would want to be scaling out, even though it's at the support of the 200-day moving average. I hate selling that, but in this situation, it made sense. So walking back through, I entered, let's see here, getting that off the screen, entered here, added here, stopped out here. So again, this was another spot where I used this wick to set my stop loss. Let's see here. I love seeing high volume wicks or high selling volume after a big sell-off. So when this was breaking down below the 200 EMA that I had added, so now I'm basically fully entered. Anything in here is like getting a little scary. So what am I looking for? I'm looking for high selling volume to indicate the bottom of that move, basically kind of a mini capitulation. This candle was very important to me. Seeing this high volume at support, I thought I might be able to salvage this trade. And then seeing this wick on high buying volume really made me excited. So I set a hard stop right here, 0.0125 or so. And that was triggered on this candle here. And that was basically a loss of about 10% of my bankroll, which is about 5 times as much as I really ever want to risk. The last time I risked 10% of my bankroll, I really can't even remember. I'm generally wanting to risk around 2% of my bankroll. But like I said, this was the highest probability trade. I was very, very confident. I was really liking the technicals and the fundamentals. So I wanted to act and basically take on bigger risks than normal. So I was totally comfortable with that. But after this stop did get triggered, now right here, now I've got to start looking at my other positions and saying, well, geez, what happens if this thing really pulls back on me? And that's where I really, that's the main reason why I'm using very tight stops right now, is to ensure that I at least recoup that loss on LTC, BTC. The unrealized profit that I have on Bitcoin and ETH right now more than makes up for that loss on LTC, BTC. So I want to just make sure that that is the case. As long as I get out of these positions, if they turn against me right now and I get out of all of them and I'm still up a little bit after taking a huge loss on LTC, BTC, then I'm a very happy camper. So that's essentially why I'm using a tighter than normal stop loss. If it wasn't for taking that big loss on LTC, BTC, I'd be looking back in here as my stop loss area. for about 50% of the position, and then the other 50% back in here or so. But since I have a big loss that I need to recuperate, I am putting 75% of the stop right here instead of 50 and 50. So being much more risk adverse, making sure that I end up in the green after the last few weeks, despite taking a big loss on LTC, BTC. And did take a small loss on LTC USD, and that was due to this sort of fake breakout that we got on the ascending triangle. Let me pull that up here. Let's see. So this one I was looking at right here. I think I was probably drawing it a bit like this in real time. Okay. So right here, I was loving, like right here, I was just all about Litecoin. I was just really, really expecting a big move right here and right here. So I took out a pretty significant position on Litecoin USD here, and I think I added to it here. And then I was also heavily exposed to LTC, BTC, and during this time, Litecoin had been severely lagging Bitcoin. Bitcoin was on a big run. Litecoin was not. It was just consolidating. So seeing it consolidate into a bullish pattern while Bitcoin was on a big move was just green lights. Lights were flashing. Get in here, and do it now, and do it in a significant way. And then it turned around shortly thereafter. And I mentioned on a recent podcast that basically at this point is when you're expecting that it was a trap. Anytime you get a breakout and then a return to the middle of the trading range, that strongly indicates that the breakout was fake and that it was a trap. So that's what I was talking about here, and was not yet exiting due to support from this 50 EMA. We noticed that it had been strong support. Gosh dang it, get the heck out of here. Strong support in here, strong support in here, strong support in here, and didn't even get there here. And then here we had a wick off of it. So I'm very interested in, maybe sometimes you'll get kind of a shakeout in both ways, where it's like a fake breakout here, and then it pulls back but finds so much support back at the middle of the trading range that it quickly goes on to create a higher high. So this wick right here off of this 50 EMA had me very intrigued. This close below right here had me very disappointed, especially because it came down all the way back to test these lows here. But I still didn't exit. And the reason why is because this 9 EMA was waiting for a cross, bearish cross there. So basically I was holding here, seeing this 50 turn into resistance on these candles, not loving it. And here, right. So basically, and why I'm holding on is that often if the price fails to get this death cross is usually when it'll kind of trampoline and really respond. So if it comes down here and did not get this cross, instead it bounced on this candle, like basically right here, and continued higher, then it could continue on in a big way. And that's something you'll see time and time again, where price gets below the 50 EMA but doesn't get this crossover and then continues. We can look at a number of examples, but basically that's what I was thinking. So right here on this candle, I was watching super close and actually starting to feel really good as it rallied significantly above the 50 and the 9, and had started to even flatten those out and get back into this range above 136. So this was looking really good. And then as soon as it closed below, I mean, it was in a matter of like 30 minutes or an hour. It went from looking great to being like terrible, a full-on exit signal. So that happened, and I got out. I probably would have gotten out like right here. And this one wasn't as big of a loss. It was probably in like the 1% of my bankroll territory, because my entry was really pretty close to my stop, and I didn't take nearly as big of a position. So I had those two losses to recuperate, and I've got the two profitable positions to help me do so. And this is the other one. I was entering on this one basically as it was doing this same pattern that Bitcoin was, testing the 200 EMA and getting a wide COF accumulation, high or low, and then that last point to enter. So was buying in here. Average cost basis is around 245. Actually, I'm mistaken there because I forgot that I added up in here, brought my average cost basis up to around the 250, 255 territory. So it was like right in here, I was thinking that we got a legitimate breakout, something like back in here. So I added in here, average cost basis is around this territory here. Target is a high confident, high probability target in my mind of 375 to 400. That's based on prior areas of horizontal. That's based on measuring this move using this, basically calling this a parabolic pole and measuring it like so. And that's based on this horizontal. I think there is some confirmation from the visible range volume profile. Yes, there is. So when we broke through this high volume node and broke above this channel here, I became highly confident that we would return to 375 to 400. When we break through high volume nodes, that tells you there's little built up resistance ahead. When you've got a pattern that's lining up with a horizontal that is confirmed with little built up prior resistance, that's about as highly confident as I can be about any target. So that is a position that I have been very hopeful about. But I did get stopped out of about 75% right here, unfortunately. So it was basically the same situation that I was looking at on Bitcoin, where we had this nice wick coming off of the 9 EMA. And then it also kind of looked to me like it basically threw back to retest the top of this channel. You could adjust it up a little bit depending on where you want to put it. So that was something that I was probably also looking at the RSI, seeing that, okay, we're starting to roll over there. It's starting to kind of look exhausted, starting to look a lot like Bitcoin. And I really did not like moving my stop up here to slightly under 300 at about, I think I would even put under 295. Like I basically was like right at the bottom of this wick is where I got filled on my exit. So essentially, I really didn't like doing that, but I felt it necessary due to needing to recoup some losses. And that's essentially, I was looking at how much unrealized profit will I be capitalizing on if this does get filled, and how much is that going to offset the losses from Litecoin. And basically, I've offset more than 50% of that loss, even though I got filled at the exact bottom of this wick, selling this bottom. It sucks, but, I was taking profit, and I was following my system, and I was being diligent about managing risk. So, all things said, I really like how this played, how I don't like how it played out, but I do like how I executed and how I trailed my stop tightly. And now I'm in a position where I can basically hold on to about 25%, and I'll be looking at 294. If this does break down this wick, now I'm going to be out of the rest of that. But I've still got some of the position to hold on. I have now made up for a good part of my losses on the LTC trade. And now I've still got the full exposure on Bitcoin, which if this fills, it will make up for more than 50% of the loss on Litecoin, which will net me a small win at the end of the day on my leveraged positions. And also give me a chance to hold on to a little bit of exposure if we do wipe that out and then find support at the bottom of this channel and continue on to the upside. So that is what I'm looking at on how to manage my positions moving forward, and how that is different based on the loss that I had to take on Litecoin and USD and BTC pairs. So now we've got a little bit of time. Why don't we look at everybody's favorite XRP? I'll pull that up real quick. And I want everybody to know that I am a technical analyst. I just like looking at charts. I don't get wrapped up in being in love or fully hating certain coins. I am absolutely in love with Bitcoin, but I don't get wrapped up in hating on other coins just because I think that they're, you know, useless or whatever. That doesn't really matter to me because of the tremendous volatility and the tremendous opportunity that I think is available. So I really don't care if we're looking at Bitcoin Cash or Ripple or Ethereum or whatever. I'm going to give the same analysis. I'm not going to be biased due to what I think about the fundamentals. And I'm also going to trade unbiased. If I think the best opportunity is in the shittiest of coins, then so be it. I am an opportunist. So taking a look here, you guys have probably started to get used to the Wyckoff pattern. And let's see here. Hopefully we can start to recognize it. This is one that looks like reaccumulation to me. Generally, accumulation will come after a sell-off. Reaccumulation will happen after the first markup, and oftentimes it will happen after the first markup. So just because you're seeing this type of pattern after a markup does not mean that it's distribution. You have to have a close eye to different points to see where is there a signal of strength, and where are the maybe spring or upthrust. So let's take a look at, oh geez Louise, this is just giving me trouble today. Why would you do that? Okay. Preliminary supply, that's PSY. And buying climax. And sometimes the Wyckoffs can be easier to identify with the line chart, since that's how the archetype is with a line chart. Sometimes that can be a little easier to the eye. Automatic reaction, secondary test, and this would be secondary test in phase B. And then we would have the river, creek, river. I always get those mixed up. Jump the creek, jump the river. I think it's creek. God damn it. I always get those mixed up. All right. So we got the creek here. Yes, it's the creek, I'm pretty sure. And then the all important is this signal of strength right here. So this happens after you jump the creek and create a higher low. That is where it is time to pay very, very close attention. And that is the area where the highest probability entry based on the Wyckoff pattern is going to be right here. So this would be last point of supply, LPSY. Kind of the last test of resistance before it breaks, and then that pullback that creates a higher low, that is point number 12 on schematic 1, and this is going to be a Wyckoff reaccumulation. And then right here we are potentially looking at point number 14, which is the last LPSY, I believe. All that I know is that it is the last place to enter. I wish I knew for sure what it was labeled, but off the top of my head, I am drawing a bit of a blank. But anyways, after we get point number 12, we want point number 13 to create a higher high, and then point number 14 to create a higher low. And what I also love seeing, which you might have noticed before I erased it, is a trend line to form, which is what we're getting here. So once we get this point number 12, which creates a higher low, point number 14, I like to see that create, kind of establish a trend line that is started from either back here, which is going to be a spring that didn't happen here because it stayed as a higher low. So we didn't get the spring, but we did get this nice trend line. So right here and right here is where I am very interested in longing XRP, and not only am I interested in it, I went ahead and pulled the trigger. Started entering here, posted a chart on Twitter, and now I am in the position of wondering, man, do I want to add here? Generally, I do, and I am very intrigued. Especially seeing this trend line, seeing this wicks come off of it, seeing this Bill Williams fractal that this candle would have created. Very intriguing. I'm not saying that I'm pulling the trigger, and I'm not saying that I'm not, but I am intrigued. I already am in, and basically going to be expecting for a return to, here was my first, no, that first target got hit on point number 13. Wow. Okay, so next target is 58, and the all-important $1 threshold would be shortly thereafter. So targets are 58 cents, 79 cents, and $1. And that's not based on the Wyckoff pattern. That is just based on horizontals and coming off a major area of support after having consolidated for a long time. That tells me that we should be in for a significant move. That being said, there's a number of reasons why I don't want to add here. And let's take a look at this chart right here. This is a very important chart for me right now. XRP BTC is creating new lows, at least trying to. It did create a new low from here and here. So it's created the lowest low since August 2018 and is very close to taking that out. If that happens, this thing could be in for a sharp move to the downside. So let's get up a chart with a little bit of a longer history. We'll go Poloni X. You can see I've got that triangle drawn on every chart. And let's see here. So if this thing breaks down, you guys can probably intuitively see that there would not be much support at all. And I would have a high confidence target of about 1,300 sats. We're currently at 4,000. So that would be a huge move and present some very, very interesting opportunities here. And the one thing that is really jumping out at me is this kind of upside down cup and handle, which is quite intriguing. I love seeing these patterns. This is very much like a kind of like a descending triangle in the sense that it's horizontal support and lower highs, lower highs, lower high, lower high, lower high, lower high, all the way down. And now it just looks like this thing could be ready to really fall through the floor. So if this does get a daily close below 4,000 sats, then it's going to present some very interesting opportunities. First thing that comes to mind would be going short XRP BTC and going long XRP USD. Does that kind of make sense? And basically, it would be a hedged position where if this breaks down support, we would expect it to continue selling off regardless of what the USD pairs do. And what I would pretty much expect is for BTC USD to rally, for XRP USD to rally based on that Wyckoff accumulation pattern, but for BTC to outperform. So they're both going up against USD, but this is selling, XRP is selling off against Bitcoin. So if you are short XRP BTC, but long XRP USD, you could be in a situation where you're actually capitalizing on both trades, but also protecting yourself against the downside in the sense that if XRP USD does rip and kind of goes to the moon and has another one of these moves, well, you're capitalizing on that. It should appreciate against USD faster than it does against BTC. So the position that is long XRP USD should be up more than the XRP BTC short is down. Hopefully that makes sense. If not, maybe go through that part again, because I think there are some very unique opportunities in this market when trading a pair against USD and trading it against Bitcoin can offer some opportunities that allow you to take advantage of both pairs while also protecting yourself against the downside of either. And then if Bitcoin pulls back against USD, XRP pulls back against USD, well, we sure think that this thing should pull back, that XRP BTC should pull back as well. So it's a situation where you can kind of cover yourself against all of the outcomes. And the way to do that is by having the right position size. So I'm paying very close attention to this and will be on the edge of my seat to see if we get a close below 4,000 Satoshis. And if that does happen, I think it will spell doom. If it doesn't happen, then potentially this is an area that it has rallied strong off of in the past. So if it fails to break down, then look out to the upside. All right, so that covered everything that I wanted to today and then some. I really appreciate everybody for tuning in. Even though Tyler wasn't here, it makes me feel good that I still see the chat going and plenty of people watching live. So I do really appreciate that. I will do my best to make daily updates myself when Tyler is unavailable, as long as people are interested in hearing me ramble on. But Tyler will be joining on a regular basis. He's just traveled out of the country over the last 24 hours. He'll be trying to join tomorrow. There is a significant time difference, so we may be coming a little early. But thanks again for everybody for tuning in. I really appreciate it, and we'll plan on seeing you tomorrow.